Okay. Hi guys, we are starting the next standard called AS 28. What is AS 28? Impairment of assets. We are calling this impairment of assets. This is a standard. If you are a CA inter student, is completely new in the new syllabus. Whether you wrote earlier or not, this is totally new. It is brought down from final to inter. In final, it's Ind AS 36. We don't bother about it. For us, it's impairment, new topic in new syllabus. Okay. What do you mean by impairment? Very, very important, guys. I'm just going to do an introduction and finish one core part of this next to 20-30 minutes. Stay with me. If you understand the next 20-30 minutes, the heart of the standard is over. What do you mean by impairment? What do you mean by impairment? Okay, I will give an example. Let's say Vignesh is developing a software. What software is Vignesh developing? He is developing a software which, let's say, we have CA classes. So he wants to develop a software whereby students can generate MCQ questions. So for example, students, now in new syllabus you have MCQ. Sir, from where to get MCQ? Students don't know. So Vignesh is now developing a new software where if you copy paste the content, study material into the software, the system will create MCQs for you following up. So Vignesh is creating an MCQ tool for CA students to be benefited. What they have to do, if they want to study AS 28 bar act he will put into system. System will create what, guys? MCQ. Not easy, correct? How can system create MCQ? System should first understand AS 28, then only it can create MCQ, correct? So Vignesh is using some coding language. Using the coding language, he built the MCQ. Perfect. This happened in the year 2021. He spent 30 lakhs for this software. He called developers, built his own coding language and built it. Now what is happening next? What is happening next, guys? He created an intangible asset as per AS 26 and he proved that this software can do what he wants. So the entry he will pass is $30 lakhs, and he believes this intangible asset will be depreciated over 5 years. So he is depreciating for 5 years. The right word is what, guys? Amortization for intangible asset. Suddenly what happened? Depreciation for 5 years, 30 divided by 5. How much, guys? 6 lakhs per year. So now we are in the year 2023. Already from 30 lakhs, he reduced 5. So 6, correct? Reduce 6 for amortization, again reduce 6. Currently the book value of this asset is 18 lakhs. This is the software that he has, correct? 2 years are over. He is happily saying, I made very good investment, students are benefited. He is not giving for free. Why will he give for free? He is charging the students 100 rupees per subject or whatever. He is also making money. He is happy that one time I developed a software. Good. Possible solution. In 2023, what happened? ChatGPT came. Now, ChatGPT can do what Vignesh's tool can do, but for free. If you don't believe me, pause the video, go to ChatGPT and write. According to AS 28, impairment of assets, please generate 5 MCQs for me to study for inter exams. I can guarantee you ChatGPT will give you 5 MCQs. How many of you use that for studying? No, I will use ChatGPT for asking chat how I'm feeling lonely, what to do. For this only you will use ChatGPT. You don't use it for purpose you need. No, I am guaranteeing you. Go home, type AS 28 talks about impairment of assets. Using impairment of assets concept, give me 5 MCQs. See if ChatGPT is giving you 5 MCQs. I can challenge you. You will get 5 MCQs. Now after ChatGPT came, everybody will use ChatGPT. What happened to Vignesh's software? Gone. So can he say book value is 18 lakhs? What is the book value now? Almost 0 or 1-2 lakhs he can get because of some code he built. Correct? So this is called impairment of an asset. Impairment, in other words, is a sudden decline in the value of asset for any reason. Are you following, guys? Let's give another example. Nokia was a big brand, correct? Nokia was a big brand. Suddenly what happened to Nokia after Apple and smartphones came? Suddenly within a span of 1-2 years, Nokia's value crashed, correct? Now can I say Nokia's plant and machinery is still worth 100 crores? No. Because of some technological change which I didn't expect or you didn't expect, which came suddenly, my assets value has significantly declined. Such a decline, I have to charge my profit loss account. This is called impairment of an asset. Let's say today Vignesh's software has become 2 lakhs. What Vignesh will do? 18 lakhs became 2 lakhs. So how much loss for him? 16 lakhs. He will write off his software by passing an entry, P&L account debit 16 lakhs, to software 16 lakhs, write off my asset in my books, impairment of asset. Are you following up? So what will happen to software now? His software in his books will be only 2 lakhs and not 18. Are you following, guys? So impairment is not depreciation. Basically, depreciation is writing off for wear and tear of assets on a yearly basis. Impairment is suddenly something is happening, so I do a write-off. Are you following, guys? This is the background for this standard. Are you understanding? Sir, when should I? So this standard is very simple. 2 paths you have for exam. The core 2 paths, guys. First, how to, or in other words, when to check for impairment. I will give you the notes also. Next is how to compute impairment loss. Impairment loss is for which asset? Is for which asset, guys? Any asset. Any asset. We have multiple assets. Let me write, for example, PPE. I'll give you notes, but I'm just giving you overview and introduction today. PPE, inventory and intangible assets. Okay. You tell me from your general knowledge, this standard is applicable for which of the asset? Is it applicable for PPE? Yes. Is it applicable for inventory? If you say yes, I will say yes. If it's applicable for intangible, if you say yes, if your answer is yes. But actually it's not applicable for all the assets. It's applicable only for a few assets. I will tell you why. In inventory standard, every year on 31st March, what do? I compare cost versus NRV and take whichever is. That means every year I am already checking if there is a loss in value, correct? So why should I have a separate standard to check again? So impairment is not applicable for standards like inventory. Are you following? But it is applicable for assets like PPE, because when we studied AS10, did I teach you anything like comparing cost versus NRV? No. So in simple, impairment is applicable for all standards where in that standard they are not checking for a loss in value. Are you understanding it? For example, take intangible assets, AS26. We don't check for any loss in value in intangibles. We just account for it. Now you have to check for any loss in value using impairment. Are you following? I will come back to this again later, but are you getting the logic, guys? So for the time being, if you are not understanding, it's okay. For now, just keep it in mind as impairment is applicable for tangible and intangible assets. We have a lot of exceptions. When to check for impairment? When should I check for impairment, guys? Hello? When should I check for impairment? Okay, you have an iPhone with you. Okay. Do you check every day, hey, iPhone broke? No. When do you check for loss in value of iPhone? Do you check every month, hey, iPhone broke? No. When do you check? When something happens. When new iPhone comes, then I will check what is the value of this phone drop. Correct? Are you following, guys? Same software example, Vignesh will not check for the fall in value of software every year. He will check only if something happens. Are you following, guys? So, when to check for impairment? Can I check yearly? No. Can I check monthly? No. Can I check once in 5 years? No. Standard is giving something called indicators of impairment. We will get to that later. What do you mean by indicators, guys? Whenever something happens, I will check if my asset has a loss in value. Are you following? For example, when ChatGPT came, I will check if my software value declined. Otherwise, why I will check? Are you following? If a new technology comes, then only I will check if there is a fall in value. Suddenly, fire came in my factory. Now only I will check if there is a fall in value. Are you following, guys? So, we have something called indicators of checking. Second is how to compute impairment. I will come back to indicators later because it is theory. It just tells if technology changes, if some legal law changes, or if there is a war happening, then my asset value can drop. Correct? How? If war is happening, why my asset value will drop? Let's say I am a brand which is, let's say, I am exporting goods to India. Sir, I am in India. Let's say I am China. Okay. China is exporting goods to India. That means for India it is import. Suddenly, if a war comes between India and China, then this export import will be banned. That means the asset for the company in China which is used for exporting goods, value is dropped. For example, PUBG is a game which is a software, correct? Which is made by whom, guys? Some Chinese, not government. China government didn't make PUBG. Some company in China, some Chinese company made PUBG game, which is a software, which is an intangible asset, which has XXX value, some value, correct? Now, suddenly few years back, what Indian government told? PUBG banned in India. So, if PUBG is banned in India, are you able to play in India now? No, sir, I am using VPN. Generally, can you play, guys? You can't play. So, what happens? Out of the number of users that is there in China for PUBG, that company, let's say 100 crore people are playing PUBG, or 100 crore is too much. Let's say in the world 10 crore people are playing PUBG. Suddenly, because of war, India banned PUBG. So, this reduced by 5 crores. Half people are from India only. So, Indians are not playing. So, value of this app will decrease. Impairment. Are you following up? Understanding, guys? Everybody with me? Let's take another real, lively happening example. Let's say, take Maldives. In Maldives and India, there is some kind of a rift happening now. So, is it safe to go to tourism for Maldives? Maybe you can try, but there is some disturbances happening between India and Maldives. In Maldives, about 25% of tourists are from India. Indians get married means one of the honeymoon spot is Maldives. Now, Maldives has hotels, correct? Now, just imagine tomorrow if Indians and all countries decide we will not go to Maldives for tourism. If everybody isolates Maldives, then will somebody come to Maldives? No. What happened to the hotel? Hotel value will decrease. That time he can't charge 30,000 rupees per day, 1 lakh rupees per day. Maldives actually charges 1 lakh per day. They can't charge. They have to charge only 5,000 per day to attract tourists. Are you following, guys? That's a fall in value of asset. Hotel is still the same. Building is still the same. But because of some economical factors which is not in my control, the hotel in Maldives has to account for a loss in value of asset. Like this, anything can happen. What is that anything is called indicators, which are triggers which lead me to say, hey, please check for what, guys? Impairment. Understood? Are you following, guys? These indicators are of two types. These indicators are of two types. With me, guys, come on, I am going to finish the heart of the standard today. Indicators are of two types: internal indicators and external indicators. I will give you detailed points later, but for now we have two types of indicators, guys. What are the two types of indicators? Internal and external. Can you give me, among the examples I gave you, what is an external indicator? From the examples I gave you, Maldives is external, ChatGPT, PUBG, all these are external indicators, because for the entity, for the company, I can't control this. Something happening outside of me, technological change, economic change. Nokia, if you take Nokia, smartphones came, Nokia got an effect. So these are all external changes. Following, what is internal change? If there's a strike, employees went and broke the machinery. If there is a fire came in the factory, so plant and machinery got destroyed. I still can't charge depreciation. So imagine we have, let's say, imagine supermarket. Supermarket got fire. Can they still continue charging depreciation, guys? Idea of depreciation is, I will use the asset for 10 years. I'll give a better example. Let's say you have a car. Car life is 10 years. I purchased for 5 lakhs. Suddenly in the third year, car got a fire or car had an accident. No insurance, I am not able to repair. So car value will drop. So I will charge for impairment. But very important, if you can repair and fix it, impairment will not come. Because for a car crashing, I can repair and fix it. That means it's only an expense of repair. This ChatGPT, PUBG, can I repair it? No. Those things where you can't reverse it by yourself, then you will not account for it now. Or car got met with an accident, sir, but I am not repairing. I left it. I left the car. I don't want the car anymore. Then it's an internal indicator of impairment. Are you following? Okay, sir. For exam, what is important? Exam, you need to learn two things. What is impairment, guys? Impairment is sudden decline or decline in value of my asset. Which asset? Can be any asset. For the time being, you think it as PPE. Okay. Is it a permanent decline? No. What if tomorrow government lifts the ban and they say PUBG you can play? Value will increase. It's not a permanent decline. It's a temporary decline, or we don't know. It can come up. It can be permanent decline, but not mandatory for it to be a permanent decline. For example, Vignesh's software, ChatGPT, permanent decline. Are you following, guys? Because ChatGPT has caused loss for so many software companies. So impairment is providing for the loss in my books for a decline in value of asset. What entry I will pass? P&L account, income statement account, debit to assets. Correct? Are you following, guys? How to know there is going to be decline? Should I wait every day? Hey, news came, newspaper, is there a decline? No. If something happens, then only I will check. What is that something happens? That something is called indicators. When to check for impairment? Indicators of impairment. Indicators are of two types: internal, external. Internal means something happening within my company, in my control, then I will account for it. External means happening outside my entity. I don't know why it's happening, but it's happening, so I will account for loss. Are you following? There are multiple points. I will show you in the book later. External is technological, economical, environmental, war, etc. Internal is fire, theft, damage, strike, all of that. There are multiple points. Are you following, guys? Fine, super, sir. I understood what is impairment. I also understood when to check for impairment. Now I want to know this, sir. How to compute that loss? That is the next thing. Can we go there, guys? Because it's one full set of discussion. How to compute? If you know how to compute, we are done with the core of the standard. So, if my carrying value in the books, what is it, guys? Carrying value. Colloquially, we call it as book value. Book value is what? Cost minus accumulated depreciation. So, if the carrying value in my books is 100, for which asset, sir? Let's say I have a plant and machinery which is helping me in manufacturing tires. Let's say I am MRF. Okay. I have a machine which is helping me in manufacturing tires. Book value is 100. If I sell the asset today, what do you call that? Estimated selling price or net realizable value, or let me keep simple. I'll come to the technical term later. For now, let's keep the term net realizable value. Correct? If NRV is 150, how much is impairment loss? If carrying value is 100, NRV is 150, how much is impairment, guys? Think, how much is impairment? Is there a loss? No, it's an increase in value. So the standard is not even applicable. Are you following? When the standard will come? Only if my NRV is, let's say, 80, then I will account for whichever is lower, then my asset will be valued at 80, and what I will do, guys? Account for a loss of 20 as impairment loss. But the standard does not stop here. It says if I have to do carrying value versus NRV, I can rather use the principle of AS2 and compare cost and NRV, whichever is lower. Correct? So standard beautifully says, look at this. You should not compare only with NRV. It says, first I will tell you the answer, then we will try to break the logic. The standard says impairment loss is equal to carrying value versus recoverable amount. First I am writing what is important for exam, and then it says recoverable amount is the higher of, I will explain logic also why it is higher, is the higher of NRV and something called value in use. This is only remember for exam first. Let me finish exam point, guys. What is impairment loss? You have to compare carrying value with recoverable amount. Recoverable amount is the higher of NRV or value in use, whichever is higher. First, let's have numbers and understand the computation. Then I will break down the logic. Trust me, you will not find the logic in any book, guys. Why it is higher? Go find why it's there in the book. You will not find it. Look at this. If carrying value is 100, if recoverable amount NRV is, let's say, 120 and value in use is 150, I will compare 100 with what? I will compare 100 with what, guys? 100 with 150, because I will take higher of NRV or value in use. I will take 150. Is there any impairment? No impairment, because the recoverable amount is more than carrying value. Following up, let's change the example. The value in use, first let me finish off for exam, guys, then I will break down the logic. The value in use is 90. What is the recoverable amount? What's the recoverable amount, guys? 120 or 90, whichever is higher. So I will take 120. Will I do impairment? No impairment, because what I can recover is more than my book value. Concept of prudence. Next example, NRV is 80. NRV is 80, value in use is 90. Sir, what is value in use? I'll explain. For now, write down. Value in use 90, NRV is 80. What is my recoverable amount now, guys? Whichever is higher. Which is higher? 90. Now I will write recoverable amount is 90, carrying amount is 100. So what is the impairment loss? What is the loss, guys? 10. For this 10, I will pass entry in MRF books. I will write P&L account debit 10, to plant and machinery 10, and write off my asset to the extent of 10. Are you following what you have to do? This only you will learn in book, what you have to do. But we have to learn the logic of this equation, correct? How many of you want to know the logic? Everybody. You can pass the exam by just applying this and doing the sum. For example, without the logic, I am going to take the logic now only, guys. Okay. Without the logic, if you want to do a sum, let's go to impairment. Next standard after intangibles is impairment. We finished already intangibles in our class. So if I just go to impairment, simply let's do one sum for you to just get. Tell you that without logic, we can even pass in the exam, or to an extent only you can get the marks. I am taking impairment standard. In impairment, let me go to illustration 1. I am just doing introduction, guys. Take illustration 1 in the book. Okay. For doing illustration 1, we have to understand what is value in use. Let me explain that, then we will come back and do illustration 1. Just bear with me for another 10-15 minutes. I want to finish this, otherwise hanging you here, you will not get the full clarity. Now, if you have a asset with you, why am I not only comparing NRV, but I am comparing NRV and value in use? For that, first you should know what is value in use. Meaning, if I use the asset for its useful life, how much money I will get? If I use plant and machinery for the next 3 years, for example, if I use plant and machinery for next 3 years, year 1 I will get 100, year 2 I will get 150, year 3 I will get 220 rupees. But what is the value today of this? Are you following? If I use the plant and machinery for next how many years, guys? Loudly. Recording students, loudly, guys. 3 years, I will get a cash flow of 100, 150 and 220. But what is the value today? Today I want to know, as of 31st March or whichever day, what is the value today? I have to find the present value of this, correct? If I have to find the value today, I have to find what, guys? Present value of this, correct? So value in use is nothing but present value of cash flows from the asset. Are you understanding of? Makes sense? So PUBG, what is the value in use? PUBG can be used for next 5 years. After that, people will get bored. PUBG company, if I use PUBG for 5 years, every year I will get 10 crores as cash flow. 10 crores for 5 years. Find the present value. Today, value of app is so much. Are you following, guys? In FM, we have done discounted cash flow. So now, are you understanding what is value in use, guys? What is value in use? Loudly with me. Present value of cash flows from the asset. Loudly with me again. Present value of cash flows from the asset. Are you understanding? Now let's look at the terms. Let's see if you're understanding what is there here. What is carrying value? Nothing but book value. What is NRV? If you sell today, how much you will get? What is value in use? If you use the asset, how much I will get? Are you following, guys? Hello? Now coming to logic. Can someone tell me in the chart or somewhere think, why am I comparing NRV and value in use and taking whichever is higher. Not able to figure out why? Okay. Yes.
Let's say in between the two, if NRV is high, we can realize the value.
Okay.
Or if the value in use is high, then it means that we can use the asset and generate more cash.
So you are explaining the formula, correct? But why is whichever is higher? Let's take a simple example. Let's take a laptop, guys. Okay, you have a laptop. What are you doing? You are a designer. You are a designer, or you are designing some software in laptop. Okay. Now, this laptop, if I sell today, or let's say I'm a person who gives laptop on rent. Why software? Simple. What is my business? I give laptop on rent. Are you following, guys? I am a lessor. I give laptop on rent. If I sell the laptop today, you will get 20,000 rupees. But if I don't sell the laptop today, and if I use the laptop for next 5 years, I can give it on rent. Assume the rent is 100 rupees per day into 365 days into 5 years. How much is that? Multiply, guys. 100 into 365 into 5. How much? 1 lakh? 82,500. But this is future cash flow, correct? This is the cash flow for how many years? 5 years. So I have to find the present value of this value. So let's assume, for the simplicity purpose, let's say present value is 90,000. Are you following, guys? So today I will get 90,000, correct? Present value of future cash flows. Now I'm asking you a common sense question. You are a businessman. Assume you are not a student for now, you are a businessman. You have a laptop. Two options. Either sell the laptop now and earn 20,000, or keep the laptop with you for 5 years, generate so much cash flow, generate present value cash flow of 90. What you will choose? How many of you will sell? Nobody. How many of you will use for 5 years, give rent and get money? Everybody chose what? 90. Now I am changing the option. If I use for 5 years, what I am going to get is not 90. I am going to get only 10,000 rupees. If I use for 5 years, I will get only 10,000. Now as a businessman, will you sell or use for 5 years? Sell. Will you sell or use for 5 years? Sell. That means you always want which gives me more money. Why you came to CA? More money. Correct? So you choose an option which gives you more money. So 20,000 is my NRV. What I can recover from this laptop is 20,000 or 90,000, whichever is higher. 20,000 is my NRV. 90,000 in my example is called present value of future cash flow, which is nothing but value in use. Are you following? That's why the formula says you compare the carrying value with the recoverable amount. What is recoverable amount? NRV. If I sell today, how much I will get, or if I use for 5 years. Now next logic. Sir, for inventory, I am comparing only cost versus NRV, whichever is lower. For PPE alone, why am I doing like this, sir? Carrying value versus recoverable value. Recoverable value is NRV or value in use, whichever is higher. Correct? Both are assets. Why for inventory only straightforward comparison? Why for PPE I am comparing NRV with value in use? Exactly. Beautiful answer. The intention of me having inventory is to sell it immediately. If I sell immediately, NRV is the one. But PPE, my intention is not to sell immediately. That's why I am comparing what I will get if I sell now versus what I will get if I keep for 5 years or 10 years. Are you following? How many of you understood logic of this equation? Perfect. For exam, logic. What you should know? Remember the logic, apply this equation, but logic will help you with many things. With this background, now if I go to illustration 1 quickly guys, look at this. Ergo Industries gives the following estimates of cash flows relating to property, plant and equipment. Discount rate is 15%, cash flow is given as so much. And they have given the following items, look at this. Residual value at the end of the useful life, property purchased for 40,000, whatever, okay. Useful life is 8 years. Net selling price, which is nothing but my NRV, correct? 20,000. Calculate, I want to calculate impairment loss. That means, look at this case, last sum for the day, we will do this and close. So I need to compute carrying value versus recoverable value. What is recoverable value? NRV or value use, whichever is higher. So you have to find 3 items, then you can find impairment loss or impairment gain. Are you following guys? Let me do this for you. Let me do this quickly guys. I want you to do it, but I know you can do it easily. Let's try to write one by one. Can you compute carrying value guys? What is carrying value? Book value minus depreciation. Look at this asset. When it's purchased, 2011. Now we are in which year? Sorry, asset is purchased on which year? Purchased on 1/1/2010 or 2020, whatever you want, 2020. Useful life is 8 years. How many years are over guys? How many years? 1 year. So how to compute depreciation? 40,000 minus residual value of 1000 divided by how many years? At the end of 2026, you keep this as 2020, this is 2026. So asset is going to be used for how many years guys? 6 years, correct? See, asset is purchased on 2020, PPE purchased on 1/1/2020, residual value at the end of 2026, that means 6 years. So divided by 6 years, how much are you getting guys? Let's check if that's the correct one. How many years are already over now? The question is, okay. Cash flows equipment on 31st December 2021. Is there any printing mistake guys? For you guys, what's the number? Exact same. So asset residual value at the end of 2026, okay. I will take useful life as 6 years, but he has already given useful life as 8. So I will take straight away what he has given. So I will do 40,000 minus 1000 divided by 8 years. What is the depreciation per year guys? 4,870, 4875. If I check the answer, look at the depreciation, 40,000 minus 1000 divided by 8. Now they are saying 3 years is completed. So which year is the asset purchased? Calculate on 31st December 2021. It should be, note that, oh, they have given it here guys. I assume 2020 as what? I assume 20XX as 2020. He has given note the year 2020 or 20XX is the immediate preceding year before the year 2010, correct? Or 2020 itself. That means it's 2019. Perfect. So I have to compute depreciation for 2 years, but they have done it for 3 years. Value in use on 31st December 2021. 2 years only, no? Is there? It should be 2. So what is the depreciation per year? per year is 4,000. We computed 4,875 is correct, but they have done it for 3 years. Basically, understanding the concept, guys, reduce for 3 years and they have found 25,375. So if you do 40,000 minus 4875, how much are you getting? 40,000 minus 4875, how much, guys? 125. Again you minus 4875, how much you are getting? 30,000. Again you minus 4875, 3 years. 25,375. Are you understanding, guys? They did depreciation for 3 years. They reduced. Recording students, I wanted you to try it at your end. But carrying amount on 31st December 2021. Asset is purchased on which day? Okay, got it. This is purchased on 1st Jan 2019. Are you following up? It's purchased on 1st Jan. So 1st Jan 2019 to 31st December 2021. How many years we have, guys? 2019 fully, 2020 fully, 2021 fully. Therefore, how many years over? 3 years are done. Are you following, guys? Everybody with me? So we have understood carrying value is 25,375. I will go to my equation and write 25,375. Are you following, guys? What is my estimated selling price? He has given in the question as it is how much? 20,000. So go here and write NRV is how much, guys? 20,000. Correct? What is value in use? Present value of cash flows. So cash flow is given, discounting rate is given. Do you know how to find present value, guys? Hello? Yes. So look at this. Take all the cash flows of all the year, whatever is given in the question, 46684. Plus I should also take what value, guys? Residual value I will take. I will apply the discounting and I found discounted cash flow of 19,025. Are you following, guys? This discounting everybody knows, correct? Vignesh, are you following? So 19,025. So now I will write here 19,025. Which is higher, guys? Which is higher? 20,000 is higher. So I will take here 20,000. Will I create impairment loss or no impairment loss? Should I make impairment loss? Yes or no? Yes. Why? Something which is worth 25,375 is reduced to 20,000. So my impairment loss will be 5,375. Let's check. I don't know if the answer is correct, guys. Impairment loss is 5,375. So what will happen? My asset of 25,375 book value will now be reduced by how much? 5,375. Balance I have left how much? How many years are left? 3 years over. Now 3 years over. So how many years are left? 5 more years. So my revised depreciation will be how much? Revised depreciation. 20,000 divided by 5. 4,000. Correct or wrong? Who forgot residual value? Residual value you should take a correct. So my residual value is 20,000 minus 1,000 divided by 5. What is depreciation per year? How much? 3,000. So this will be wrong. This will be correct. Let's check. Are you following, guys? Look at this. Revised carrying amount 25,375 minus 5,375. 20,000 lakhs. Revised depreciation 20,000 minus 1 divided by 5. 3,800. Are you all following, guys? Hello. Now go to the question. What they asked me to compute. Carrying amount at the end of year 2021 after 3 years depreciation. Value in use, present value of future cash flows, recoverable amount, higher of selling price or value in use, impairment loss to be recognized for the year. We found out 5,375 75, revised carrying amount 20,000, depreciation for the year we have computed as so much. Are you understanding, guys? Hello, are you following? How many of you genuinely understood impairment of asset standard? Honestly, the core of the standard is over. Understood what is impairment of? Easy or difficult? This only is brought from final to inter because it makes sense to have it in inter because AS10, AS26 is here. You can't have impairment there. We have impairment in final, in AS, leave it. Are you following, guys? Clear? Genuinely, easy or difficult? Easy. That's about it. For exam, this. But for us, we saw logic also. Clear? Huh? This sum, they have given the dates like this, XX and all. Don't worry. In exam, it will be properly 2022, 2025. They will give it properly. Clear, guys? With this, our introduction to impairment is done. In the next session, we will continue and complete this standard. Thank you, guys.